All right, how's it going, everyone? I hope you're doing well. Welcome back to my channel. I haven't posted in like 2.5 months, and there's a reason for it, which I'll be breaking down in a minute. But I am back, and I will be posting a few videos each week now, probably two, maybe three on a good week. Just breaking down concepts and looking for people that are ultimately just like-minded, that like the same thing I do, which is trading, and not the flashy trading, not the stuff you see online, not like the everything that comes along with it, but the actual process of it and the actual craft of becoming better and understanding what you're doing and ultimately looking to achieve mastery, right? That's what I'm after at the end of the day. That's what I've been after for 5 years. And I'm just looking for similar people, that are interested in the same stuff I am. And with that being said, the whole reason I stepped away was I really have never been a very public person. Up until recently, I've posted more on social media. I've been extremely private the last like 4 or 5 years of my life, and there's reasons for that. It's just what I prefer. It's way more my personality. I don't like everyone knowing what I'm doing, and I feel like whenever I'm putting out my P&Ls, like if you go look at the start of this channel, the 4 or 5 videos that are on there, and I'm gonna leave them up. It's like, oh, I made $20,000, I made $7,000, or whatever it is. It's like I don't like talking about that stuff. Can I and force myself to do it? Yeah, I can, but I don't like it. I don't like having to explain that, and I also think it's probably doesn't make some people feel that great. And then also, yeah, there's just like it's my life. I don't really want everyone to know what's going on all the time. So that's one aspect to why I stopped posting. Another aspect is I just don't like where the space is. I don't like the whole course selling space and how hyped it is and all these things. Um, I just don't really want to be gravitated into that, or I guess categorized as that, because that's not me. I literally have not been on social media for 5 years, and like this is brand new to me. So I'm kind of like coming out of nowhere, but I'm already doing well, and it's not like I came on here and then, like I literally have one person that I'm coaching as we speak, and I live in a very nice apartment. I have all the things that I want, is what I'm saying, and so I just don't want to be categorized into this like other group of people. And you know what I'm talking about, like just super flashy, fancy cars, all the things. There's nothing wrong with that. I'm into some of that, but it's like it's not what it's about. And more importantly, I'm like truly passionate about this stuff. As much as I care about those things, um, I'm just passionate about this. I view it as the best game in the world, and I've viewed it that way for years. And so I'm looking to attract the same kind of people, and I'd rather have 5 consistent, loyal people that follow me and end up becoming friends and hopefully trading together, like messaging each day about trading for the next 5 or 10, 15, 20 years, over like 100 or 200 people that are just extremely money hungry, which there's nothing wrong with that, but I don't want people that are looking to get rich quick, like tomorrow or anything. I want people that want to enjoy the process, get rich slow, and just um, actually build a skill that they can use for the rest of their lives. And so that's the type of person that I'm looking to attract to this channel. And I think that the best way to do that is to not talk about P&L moving forward at all, and just talk about process, concepts, and real trades. Obviously, I'll show my executions and whatnot, but I'm not going to be putting in crazy titles like, oh, I made $10,000 in this trade, or $20,000 like I did in these past videos, because it just doesn't really feel like me. And I think that's okay. And I think that people will understand that. And I think that, again, I'll attract the right people to this channel. And so with that being said, I'm going to break into a trade that I took. I put this trade on the 19th of May, so 2 days ago. I sold it yesterday, and I'll explain my whole thought process behind it, what made it so obvious, and then I'll also be explaining another trade that I took around, I think it was like 2 weeks ago, that was very, very similar, and just like the similarities between the two. This is one of my favorite setups, and this is a setup that you're going to see uh, in most bull markets. This is like the setup that you want to be trading whenever the market is hot. And what I mean by hot is like right now, everything's going crazy in the tech sector. You have SNDK, ARM, INTC, MU, all of these crazy stocks that are just breaking out. And that leads me to what this setup is called. It's called the breakout setup. And did I invent this setup? Absolutely not. This is just no one invented it, put it that way. It's just what the market does. So I want you guys to understand that there is no perfect like secret sauce out there. The market just acts a certain way, and that is the reality. And your job is to align yourself to the reality of what is going on, and it's that simple. Your job is not to invent something new. Your job is to observe what has happened and continues to happen over the last 200, 300 years of the stock market, and then capitalize on that. You're not trying to like create something new. And so the breakout setup has been around forever. You can go look at stocks back in the internet bubble 25 years ago, and you will see tons of breakouts. And it's no different than what's going on right now with semiconductors and AI stocks and all of that. It's the same thing. And so this is a breakout setup, and this is the breakout I took on ARM 2 days ago, and I'll just break into the overall setup itself. For breakout, what you're going to be looking for is, I don't have all the indicators on this chart, but you're going to want to have some EMAs. You're going to want to use the 20 EMA, the 200 EMA, and like the 50 EMA, right? So the blue is the 20, the purple is the 200, and then just for example's sake, I'll add the 50. Personally, I already kind of know where it is in my head, so that's why I don't even like chart it always. I'm just I've done this for quite a while, and you just kind of already know what's above these indicators. And so for this setup, you're going to be looking for, well, first you're going to put the EMAs on the chart. So you have the 200, the 50, the 20. And you're just going to be looking for a stock that has a massive move, okay? Massive move. Just like this, right? We have a pretty big move here. I think this was like 50, 60%. So massive, right? And I mean, this itself was a breakout that I did not take, but this is a pretty good one. But you're going to be looking for a stock like this that has some type of big move like this or like this. And then after that, you're going to want to see the stock rest, okay? So it's just going to look like this. You're going to see big move, some type of flag, and then you're going to need a break, right? And this is typically how stocks move. Most of the time, you'll see them go through long periods of sideways action, nothing's going on, and then bam, big breakout, and then we start to see those tight flags or consolidations, and then we get big, long trends that last like months to years in some cases. Very similar to this, right? We have a very long period of like, what is even going on, right? All this energy built up. Clearly people were accumulating the stock the whole time. And then we finally get this breakout of this nearly 2-year long range. And then look what happens. We run hundreds of %. And so that's what we're looking for. We're looking for something that has a lot of energy built up and is going to be breaking out above these rising moving averages. And so it's really that simple. This had popped up on my scanner like right in here, and I was just waiting for it to get tight above this 20 MA here, and you can see that happens like 3 times. We were right here, and then this just gets super compressed, right? It starts off kind of like all over the place after this big move, and then it just gets tighter and tighter. Like I'm just trying to visually like draw it here. It gets coiled up in these areas. That means it's going to expand. It's just a matter of which way, right? So if this broke down here, I'm not buying it. I'm going to wait for it to reclaim, right? But I literally bought this day right here on the 19th at the close. And then I added more the next morning, and my average price was 226. And then I sold it all on this first day in like the 253, 252 area for like a 15% gain. And I'll just show you guys those executions. You can't see the prior day executions right here just because like I don't have that chart, but I did start adding on the 19th here. And then you can see I added in the pre-market at 228, I added more at 227, and then I added more 227 and like 230, which moved my average price to about 226 because I was in from 223 the day before. And then you see me take all those exits between 252 and 254 that morning just because I thought this was a very big move. I did end up swinging a small portion of it, which I sold at like 278 this morning, like somewhere in there. And I definitely like could have done a better job being bigger picture with this, but I ultimately just took it as a single, and that's just the way I approached it. but there's nothing wrong with like saying, okay, I'm gonna buy this here and then I'm gonna hold it until it trails out with like a 5 period moving average or 10 period moving average, or you could just wait for a prior bar low break, right? So you say we get another green day here, and then the next day it breaks that low of that green bar. Okay, you could just get out, and that could be your trailing system. For me personally, I was just looking to take it into the first 1 to 2 days and move on. And that's just my current rules for this setup. You know, over time and with certain contexts, I am trying to be bigger picture, but that's pretty much what I look for on these. And so, again, just to reiterate why this stock specifically, I was scanning, I saw a massive move on my breakout scanner, and then I saw that this thing started to build out a sideways base, and then it started to get tight at that base, and the moving averages started to curl up with the price action there, and then I ended up taking the break of that trend line to the upside, and the volume increased a little bit on this day as well, which you can see right here. Like it was slightly increased, and then just how it was holding compared to the rest of the market was very interesting to me. What I mean by the rest of the market is QQQ and SPY. On this particular day, May 19th, we'll go look at QQQ, which is what ARM runs off of. You can see that the Qs like didn't have like a great day, okay? You can see it opened, pressed down, and then pushed up, and then closed like mid-range, okay? Well, ARM had complete relative strength. Does that make sense? ARM closed on highs and was barely down at all on the day at any point. So that's what gave me a lot of conviction on the setup, is the relative strength that ARM had compared to the market. It was very clear to me that ARM was going to have, if the market did bounce, ARM was going to have a stronger bounce than the market, if that makes sense. So a couple checks in favor. We have, again, just some basic criteria. You want to be looking for on your scanner big moving stocks with volume, okay? Like massive moves, 10, 20, 30, 40, 50% over, a week or a month, whatever it might be. And you're going to want to see stock trending above 20/50/200 SMA/EMA, whatever you want to use. It's just smooth moving average or exponential moving average. And then you're going to want to see like a minimum consolidation of like 5 to 7 days. It's really not binary. Like, people ask me that, like, how long should I wait for a consolidation? It just depends. It depends how overextended the broad market is. It depends, how hot is that name? How many legs has that name had? Like, for example, you're not going to need as much of a consolidation down in this area as you would up here, because the stock hasn't made as big of a move off of like this mean area. And what I mean is, like, this has been the average price for a long time, right? It's clearly a fair price. For it to expand from here, it doesn't need like a lot more energy. But after the stock makes a big move, it needs more time to build that energy back up to show us that it can continue higher. Does that make sense? So just for example's sake, and like in this case, after a big move like this, I'd want to see consolidation that's about as long as the time it took to make that move. So this move really started around like the 14th or 15th, and it ended, okay, so we're talking like, let's just say 10 trading days here. After this big move here, we want to see at least 10 trading days. So let's just say 7 to 10 trading days. And I'd say that's like a pretty good basic rule. Anything less than that, you want to be more selective, and anything more than that, even better, right? The more energy, the better. If something's breaking out of a 2-month-long base, that's typically a lot better than a 2-week-long base. In most cases, right? Like, of course, there's exceptions to the rule, and there's nuances that apply to certain situations. However, it tends to be the case. Hold on, I need some water. Okay, and then why did I select ARM specifically? Well, again, ARM is in the semiconductor space, and ARM has been, just from a price action perspective, it's already at all-time highs, right? It made an all-time high on this breakout here, April 22nd. And so there's just no room for this to, there's no resistance, essentially. Like, it is showing relative strength compared to the rest of the market. It's in the hottest sector in the market. Everything else has been strong. Um, again, QQQ was kind of weak on the 19th, and this thing was not. This thing closed on highs and had a little bit relative volume and was super, super clean. Okay, so it's really simple. Like, there's not much more to explain than that. Hot sector, relative strength compared to QQQ. And QQQ is just what leads the market. It's the top 100 companies. So keep that in mind. I really don't think there's much more to this trade than these variables. It's really that simple. A lot of it's truly experience too. Like, you can know what a breakout is, but you're gonna take a lot of wrong breakouts because there's just nuances that apply. Like, what if you're trying to take a breakout whenever the NASDAQ, which is QQQ, is in these areas here, right? The breakout is not gonna work as well, okay? It's just not. But the breakout's gonna work super well when Qs are making new highs all the time like they are in these areas, right? Like, this is a breakout market, okay? And this is what a lot of people don't understand. In these times here, a lot harder to trade, to the breakouts at least, right? Like, there's other strategies that do work. In these times, breakouts are fantastic. In these times, no. But in these times, breakouts are fantastic. Why? The market's breaking out, okay? The same thing happens on repeat. There's just different stages. You have phases of, like, consolidation, kind of. You have phases of downtrends. They're just bear markets, whatever people want to call them. It's essentially just like, think of it as the market's just like recalibrating itself, okay? Just for a move higher eventually. So you have to understand these phases. Otherwise, you're going to be taking all of these breakouts that ultimately just have like no follow through. So the type of environment that we're in the market is super, super important, and you need to understand these things. So I'll note that down as well. Great overall market for breakouts. Super important. And then in terms of like entry and exit and everything like that, once you think all the energy is built up and you have all these checks in favor, and the market's strong, this stock is strong, it's having relative strength, it's hugging up against those moving averages, like this blue one's the 20 period. Whenever you start to see it break this like downtrend here, sometimes it's just gonna be a flat top. And what do I mean by that? It's just gonna be like this. You're gonna have, instead of it being you taking the breakout here, you're gonna wait till it breaks above the high. Why? Because it's a flat top. A good example would be RGTI. It's not really a flat top. Wow, what crazy moves these were. I forget about these. But yeah, this is kind of an example here. Like, this is breaking out right now. It's not really like a big move and then like that smooth downtrend. It's just like a choppy kind of flat top range, and then you're going to buy through the flat top high. So it just depends. There's different like variations of breakouts, if that makes sense. And so going back here, I literally just bought at the close here whenever I thought the trend started to shift, and I thought that this had rested enough and that there wasn't, like, we didn't need to shake anyone else out, if that makes sense. It was ready to go. It had enough energy. We were building higher highs, as you can see here, building higher highs. We've rested for a long enough period of time after this big move here. I just think there's enough energy built up for it to go. And so, like I said, I put some on at the close here. I held it overnight. And then the next morning when we were gapping up, I just started adding at the open. And bam. That's history, and you have a fantastic trade. And from my actual entry, it's up like 30%. It's absolutely insane. So that's really it. And then in terms of exiting, there's a couple things you can do. You can be the guy like me right now, where I'm just looking for the first big move, the first day, 2-3 days, and I'm just taking the trade off slowly. Like I said, I sold most in these areas, and then the last bit in like this area, which you can see here. Obviously the red arrows are exits, sales, and the greens are buys. Or you could be the guy that's looking to hold for a bigger picture move, depending on what type of market you think we're in. I definitely think this is a valid enough market to hold for bigger picture moves, but it's just subjective. It depends on what you're looking for in your own trading, what kind of time you have, and ultimately your personality in a sense as well. But that's really all I got for this video. This is just breaking down a breakout setup, which is a very universal setup. It's gone on forever. It's not something I made up. Again, no one made it up. It's just how the market acts, right? I want you guys to understand that the market is not some secret mystery. You know, people think that people have mysteries and like they know everything and like, wow, I discovered something. It's like, nah, man, this stuff's been going on forever. You're just learning how to capitalize on it. And so I didn't invent the breakout setup. No one did. Okay? There's nothing new under the sun. There really is not. It's just a matter of building a system to capture it, and that's really it. So I hope this helps you guys understand one of my favorite trading setups, and I hope that you're going to be able to see it and capture it on your own. Again, I'm going to be posting 2 or 3 YouTube videos a week again, coming back, and hopefully building out a pretty cool community here. That's the goal. And another reason that I decided to is because I have had like 20 people ask me in the last like month about coaching them in some type of way, and I really decided to do it because the PDT rule is going away. Okay, what does that mean? So currently you need over $25,000 in your account to make more than 3 to 5 day trades a week. I think it's 3 trades a week at least. Maybe it's 5, somewhere between there. I can't remember. But that rule is being taken away for the first time in like 20 something years. That rule is being taken away in like 3 weeks, maybe even 2 weeks at this point. It's June 4th. And so what that means is people can trade pretty actively day to day with only like 2 or 3 grand in their account at a bare minimum. Okay, so that's huge. That's a game changer, and that makes me actually want to coach, because beforehand I was like, yeah, you need like 25, 30K minimum, and so I didn't even really take it seriously when people asked me, because a lot of people don't really want to do that or don't have it at the current time, which is completely okay. And so yeah, that's obviously game changing and a big reason why I'm deciding to become consistent on social media again. So yeah, but I want to make sure I'm attracting the right people and doing things that are authentic to me, and not trying to like fit in with all the other social media traders and influencers essentially. So again, I hope this video helped, and I hope it gives you guys an idea of my favorite long setup, which is a breakout.